Welcome back. Today we are conducting an exhaustive deep dive into Apple's Q4 2025 earnings report. We have 8 key data visualizations to analyze, covering historical beats and future forecasts. Before we start, please like this video and subscribe to the channel for more institutional-grade financial research. Let's look at the numbers. Looking at the earnings per share chart, Apple has demonstrated a remarkable streak of exceeding market expectations throughout the fiscal year. In the most recent 4Q25 reporting period, the company achieved a reported EPS of 2.84, significantly higher than the estimated 2.65. This trend of beating estimates is consistent across every quarter shown, from the 1Q25 period all the way to the present results. The magnitude of these beats highlights Apple's superior operational execution and its ability to manage costs effectively while driving high-margin revenue. Such consistent outperformance is a major factor in maintaining positive investor sentiment and justifying the stock's premium valuation in the technology sector. When we compare the estimated light blue bars to the reported darker blue bars, the strength of the operational trend becomes visually undeniable. This strong performance provides a solid foundation for future growth as the company enters the next fiscal year with significant positive momentum. In conclusion, the EPS data reinforces Apple's position as a dominant profit-generating machine capable of delivering value consistently to its global shareholders. The quarterly earnings surprise amount table provides a quantitative look at Apple's operational resilience over the last several reporting periods. For the fiscal year end in December 2025, Apple reported an EPS of 2.84 against a consensus of 2.65, resulting in a 7.17% positive surprise. This trend of positive surprises is evident across the entire year, with June 2025 showing a double-digit beat of over 10%. These results demonstrate the reliability of Apple's management guidance and its ability to underpromise and overdeliver to the public markets. The consistent beats reflect strong execution across both hardware product launches and the continued high-margin growth of the services segment. For institutional investors, this track record of consistency significantly reduces the perceived risk associated with quarterly earnings announcements. Historically, these earnings beats have served as key catalysts for stock price appreciation, providing validation for long-term growth theses. Overall, the surprise data highlights a company that is masterfully navigating supply chain complexities and global consumer demand shifts. Turning our focus to the future, the quarterly earnings forecast highlights analysts' expectations for the upcoming 2026 fiscal periods. For the quarter ending in March 2026, the consensus EPS forecast stands at 1.88, with a high estimate reaching as far as $2. This consensus is backed by 12 distinct analyst estimates, showing a tight range of professional opinions on the company's near-term performance. We see a projected seasonal dip in June 2026 to 1.7, which is typical for Apple as the market anticipates new product cycles in the fall. However, forecasts accelerate significantly into September and December 2026, with EPS expected to reach 2.81 by the end of the calendar year. The high EPS forecast for December 2026 of 318 reflects significant optimism surrounding the next generation of hardware and AI integration. Even looking out to March 2027, the consensus remains robust at 212, suggesting that the growth trajectory is expected to be durable. This detailed quarterly outlook provides investors with a clear roadmap of the expected seasonal and product-driven earnings cycles ahead. The yearly earnings forecast chart visualizes Apple's potential growth path through 2029, offering a long-term perspective for investors. For the fiscal year end in September 2026, the consensus EPS stands at 8.41, supported by 14 analyst estimates and a high estimate of 8.83. Growth is expected to accelerate in 2027, with the consensus EPS rising to 9.29, reflecting the long-term impact of services and hardware innovation. While there are fewer estimates for 2028 and 2029, the high targets reach well over $11 and $12, indicating a very bullish long-term ceiling. This long-term forecast assumes the sustainability of Apple's high margins and its ability to continue expanding its global ecosystem of users. The presence of upward revisions even in the long-term data suggests that professional analysts are increasingly confident in the company's multi-year strategy. For valuation purposes, these yearly figures are critical for discounted cash flow models and calculating the stock's forward multiple relative to peers. Overall, the yearly outlook presents a picture of a company that is expected to compound its earnings power consistently over the next half-decade. Estimate momentum is a critical leading indicator of future price movements, measuring shifts in analyst sentiment over the past week and month. For the quarter ending March 2026, we see extreme stability, with the consensus EPS forecast remaining unchanged at 188 over the past month. However, for the full fiscal year ending September 2026, we see a positive shift, with the consensus increasing from 8.39 to 8.41 in the last month. This 0.24% increase is driven by one analyst raising their yearly forecast, which, while small, indicates a subtle positive tilt in market sentiment. In the financial markets, positive momentum in earnings estimates often precedes positive stock price action as expectations begin to outpace current prices. The lack of any downward revisions over the past month suggests a very low immediate earnings risk, providing a technical floor for the stock valuation. This stability and slight upward bias are particularly noteworthy given the broader macroeconomic volatility and shifting interest rate expectations during this period. Overall, the estimate momentum data confirms that Apple's earnings power is not just maintaining its ground, but continues to see incremental improvements. The change in consensus chart provides a visual representation of how earnings forecasts have evolved over the crucial 1 month and 1 week timeframes. We see remarkable stability in the yearly end September 2026 forecast, which is represented by the taller dark blue bars on the chart. Similarly, the quarterly end March 2026 forecast, shown by the shorter light blue bars, has maintained its level without any significant fluctuations. Comparing the 1 month ago data to the current reading shows that the collective wisdom of Wall Street has remained firmly rooted in its original thesis. This lack of deviation in consensus suggests that there have been no major negative surprises or catalysts to force a reevaluation of Apple's earnings power. A stable consensus mean is often a sign of high technical reliability in analyst models, where the underlying business inputs are well understood. For the market, these stable trends act as a confidence-building measure, reducing the likelihood of unexpected volatility during the next reporting cycle. In summary, the consensus trend data confirms a period of steady and reliable expectations, reflecting Apple's status as a stable retail holding. The number of estimates changed table provides a granular look at individual analyst activity following the latest corporate developments. For the fiscal quarter ending March 2026, we see 0 downward revisions, a critical data point that indicates no institutional selling pressure based on earnings. Similarly, there were 0 upward revisions for the same quarter, suggesting that analysts believe the current forecasts accurately reflect near-term potential. The most notable activity is for the full fiscal year ending September 2026, where we see one professional analyst raising their long-term forecast. The complete absence of any down moves across both quarterly and yearly periods is a powerful signal of fundamental strength in a volatile market. This data gives the current consensus a sense of unanimity, where analysts are comfortable holding their ground rather than rushing to adjust their targets. In an environment where many large-cap companies are seeing significant downward revisions, Apple's stability here is a key differentiator for investors. Overall, the revision count data reinforces the theme of high-conviction stability that has characterized Apple's financial performance throughout this year. Finally, let's examine how the equity markets are valuing Apple in the wake of these results. The stock recently traded at $257.46. While the daily change showed a modest decline of 1.09%, this must be viewed in the context of the broader market movements and recent highs. Trading volume remains high, with over 41 million shares changing hands, indicating continued strong institutional interest and liquidity for the stock. The 52-week range of $169 to $288 highlights the significant capital appreciation that long-term shareholders have enjoyed over the past year. Trading near the upper end of its yearly range suggests that the market continues to price in high expectations for Apple's future product cycles. For many investors, Apple represents a safe haven asset in the technology space, offering a unique blend of growth and capital preservation. The market's reaction to quarterly results continues to be a primary driver of the stock's multi-year upward trajectory and valuation multiples. In conclusion, the market activity data confirms that Apple remains a core holding for both retail and institutional investors globally. In summary, Apple's Q4 2025 results reinforce its status as a cornerstone of the global economy. The data shows exceptional consistency and growth. Thank you for joining this analysis. Please share your thoughts in the comments, and we'll see you in the next deep dive.